Yo, what is going on, guys? Welcome to another video, and I'm gonna need everybody, and I mean everybody, to take a deep breath and calm down. I already know how it goes with sentiment and psychology on days like today, so that's why I always prioritize getting these types of videos out so I can remind everybody why we do what we do, and just the overall fact that the short term does not matter. You gotta ignore the noise. You gotta stop thinking about the short term. So let's just go ahead and get to everything. We're gonna bring this all full circle, right? So it actually makes sense why the market is down. It really does, if you really think about it. Like, you can say, oh, well, the Fed's not raising rates 75 basis points, and the market rallied yesterday tremendously. You know, everybody was up like 3%. Why is everything down worse than it was yesterday? Like, for example, I was up 3% yesterday when the Fed spoke and everybody got happy. Today, I am down 4%. That is one heck of a swing. That is some insane volatility. And, you know, a lot of people are probably thinking, like, why is this happening? The market's unfair. It's a scam. I'm seeing a lot of that stuff. For those who don't know, I often look on Twitter to kind of see market sentiment. I look on Twitter and I look on Reddit because I always want to know what retail investors are thinking. Because, you know, I hate to say it, and this isn't my words, but Wall Street calls us dumb money. And there's a reason for that. They call us dumb because typically we make mistakes that a seasoned investor wouldn't make, right? And so when I looked at Reddit and Twitter, everybody was panicking, and I saw all these people saying, oh, the stock market's a scam, it's unfair, it's never going green again, it's going red, I'm going to lose all my money. And that's something that somebody new would say, because if you're experienced, you know the stock market always, you know, bounces back. It's just a matter of when. And during the short-term periods where the stock market is red, people tend to forget the long-term aspect that markets always go up, especially if you're invested in good companies or index funds, right? But let me just tell you guys why the market's down, because I know a lot of people probably have no idea. Well, you saw the 10-year yield hit 3%, which is pretty incredible. It hasn't hit that level in years. It's been a long time. So that's one reason. The other reason is, even though everything that happened with the Fed happened yesterday, you still have no proof yet that inflation is going down. And we're going to need to see that in the next CPI print, which is coming up very soon. So that's another reason. You know, investors took today to digest what the Fed said, and then they're also digesting everything else going around. They're like, yeah, that's not enough to keep us happy. Sell. That's literally what you're saying. You also got to keep in mind, we did have the first quarter of negative GDP. That still weighs on investors' minds. So you definitely have to keep that in mind. And then the final thing that was the nail to the coffin, this is the main reason why everything sold off today, is everybody's earnings this morning was crap. It was poopy, dumpster, dookie in the booty. It was terrible. So you've got a very mixed earnings season. Earnings today overall were not good at all. Earnings yesterday weren't really all that good either. And, you know, you had companies like Etsy that just absolutely stunk it up. Etsy and freaking Uber and all these other companies. And the market doesn't like that. So it makes sense why the market is down. I think sometimes you got to be a little bit more reasonable and rational when it comes to investing. You just got to be honest with yourself. You can't always go out here like I'm seeing on Twitter. The market's rigged. Everything's unfair. I'm losing all my money. Well, you got to think about it. Go look at the chart and look at when you were buying stocks. Did you buy stocks when they were going up, or did you buy stocks when they were going down? Most retail investors always buy stocks when they were going up. I bet you when the market reached its highs between March 28th and April 4th, I bet you that's when retail was buying. I bet you. And then when the market went down, then retail starts complaining and blah, blah, blah. And once you get a tiny dip, that's probably when retail started to buy. They didn't be patient and wait for the real dip, which is pretty much what we're getting right now. That's why I've been buying like crazy, because these are the dips that I've been waiting on. Now, let me make this very clear. Today, I have not bought a thing because I've already put some cash to work. You know, like I always say, you shouldn't put all your cash to work. You should put some cash to work. And I did put some cash to work. I have been buying the dip consistently since Friday. I bought on Friday. I bought on Monday. I bought on Tuesday. Literally, I bought all 3 days. And today, and probably for the rest of the week, I'm going to chill out. I'm going to let some of my cash accumulate more, and I'm just going to be patient and wait. And so my overall strategy, and what I think is smart to do, is I think that you guys should, I think this, if you already have money invested in the market, then it does make sense to hold some cash and stand by and be patient, right? But I think a lot of retail investors make the mistake, because I see this on Twitter all the time with these, you know, Twitter gurus. They'll say like, oh, I'm going 100% cash. I'm pulling all my money out. I don't think that's a good idea at all. I think that's really dumb. I think you should always have something in the market, because you always want to be putting your money to work, even if the market's going down. Like I said, things flip on a dime. We have seen this so many times. So overall, what I would say is, if you've got a pretty decent position in a lot of your stocks, which I can only speak for myself, right? I do. Like, I feel like my position in index funds is pretty good. I feel like my position in Google is pretty good. I've been buying a dip in that religiously ever since it went under 2,500. I feel like I like my position in that. My position in Tesla is pretty good. My position in Apple is pretty good. I've been waiting to buy Microsoft, but I haven't gotten that chance. So maybe Microsoft is on my list. If Costco continues to go lower, I'll probably add some of that too, maybe. But overall, I like my positions, right? So I think now that I'm happy and satisfied with my positions, now I can start to accumulate more cash and just kind of wait. I think this is a period where you just kind of wait. So I think it doesn't hurt to wait before you put cash to work between now and when CPI comes out. I really don't think it hurts. And so that's all I want to say. But in terms of all this panic selling and all this, the market is rigged talk, you don't want to talk like that. Wall Street laughs at people like that. You have to take into account the economic factors that are causing that. And obviously, it doesn't matter in the long term. I want to make that very clear. Short-term economic factors are always going to do things to the market, but long-term, it doesn't matter because these macroeconomic factors always go away eventually. And that's why I say it's always good to buy stocks for the long term, especially when you're buying on the dip. But in the short term, obviously, there's a lot of fear. And yeah, it makes a lot of sense why the market is selling down. It really does. I mean, earnings was an absolute crap show this morning and yesterday. So, I mean, what can you say? It is what it is. So, I just wanted to get this out here just to kind of calm people down. I promise you it's not the end of the world. I can 100% promise you. You can put all the money in the world on it. We can place a bet if you want. Whatever you want to do. We can place any bet you want. I promise you the market will come back. It always does. The only issue here is nobody knows when. It could be next week. It could be next month. It could be a few months of just blood red. It really could. And I know today is really, really ugly. I literally just got a text message right now from CNBC. Says breaking news, stocks extend losses with Dow dropping 800 points as post-Fed rally evaporates. Yeah, we lost everything. We really did. Let me log into my, let me look at my Fidelity and see how much I'm down now. I was down 4%, but it looks like the market is dropping right as I'm speaking. So let me just go ahead and see how bad it is. Am I down 5% yet? Oh, no, I'm not down 5%. Yeah, I'm still only down 4%. But like I said, it's not the end of the world. And yes, it sucks to see me down this much money because I'm down a lot. But it's a paper loss, The market will come back. We're all in good companies. At least we should be. So like I said, eventually Apple, Microsoft, Pepsi, Costco, even Disney, I think will come back eventually. So let's just see how bad the bloodbath is, Never hurts to look. Yeah, it's bad. QQQ's at 316. Apple's back in the 150s. Bye. Maybe wait for Apple to go maybe to 157 or lower, maybe. Microsoft. Yeah, Microsoft goes to 270 even. That's the only stock I would probably buy at this point. Everything else, I am satisfied with my position. Disney, Tesla, back in the 800s. Yeah, it's ugly out here, guys. I mean, what else can you say? It's ugly. It is what it is. If you're the type of person who wants to sit in cash, I don't think that's a terrible idea if you want to sit and wait. But what I would say is don't be 100% in cash. You should have something invested in the market. Don't be that person. That's not a wise idea. And if you're looking for a place to start, if you've already pulled all your money out and you're like, man, I'm going 100% cash, I'm scared. I can tell you right now, one, that's not a good idea. And two, I think the best place you could start, you could get you a little bit of the SPY. You could get you some VTI. You could get you, I don't know why that rhymed, but you could get you a little bit of VOO. You can do something like that. I think that's the best place to start. And overall, I'm telling you, the fear will go away. I don't know when, but eventually it will go away. So the ultimate message I want to say in this video is please ignore the noise. Be careful watching CNBC and all the other people, because a lot of those people are shorts and they go on these platforms and they specifically spread FUD just so their shorts can print. It's crazy how the game works, but that's really how the game works. It really happens. So be really careful. Do your own research. I'm going to start releasing a series of videos where I do, some deep research in the company. So I think that'll be helpful. So we can all get an idea of what to buy and what to stay away from, at least in my opinion. I could always be wrong. I am not a market genius. I'm just a guy who likes stocks and investing, right? And so, yeah. Please, everybody, take a deep breath and calm down. Do not trip too much. And if you're panicking right now, your portfolio, then chances are you have too much money in the stock market. But the money that I have in the market is money that I can afford not to lose, because nobody wants to lose money. But it's money that I can afford to let sit there for the next 3 to 5 years that I don't need immediate access to. You know, if an emergency happens, my car breaks down, some crazy bill comes up, something medical happens, I have money in the bank to take care of myself and survive whatever emergency or crazy thing might happen this year. And I think this is, again, where retail investors go wrong. Instead of having a decent amount of money in their bank accounts, like an emergency fund, and then having money that they can afford to not worry about for the next 3 to 5 years in stocks, I think what retail investors do is they get greedy and they put all the money that they have in the stocks. And then when stocks drop, they get upset because they have their entire freaking net worth in stocks. And that's just not a good idea. You do not want to have your entire net worth in stocks. You definitely want to have some in liquid cash because you just never know. There's always going to be a rainy day. There's always going to be some disaster. I mean, every year something stupid happens to me. Literally, it's happened so many times. Like, I just really want to preach that, because I think that's another thing that retail investors don't understand. But I really think that this is where people go wrong. And I think this is why everybody panics so much, is because people don't follow the core fundamentals of investing. You only invest essentially what you can afford. Excuse me. I don't like the afford to lose thing because nobody wants to lose money. So I never say that. But you should only invest what you can afford to hold for the next 3 to 5 years. Only money that you know for a fact you're not going to need for the next 3 to 5 years. For some people, that amount is $10,000. For some people, that amount is $100,000. For some people, that amount is $10. If that's all you can afford, that's fine. Put it in there, let it sit, let it build. And yeah, that's all I got to say. Hopefully this video was helpful. There you guys have it. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you guys in the next one.